Good morning, or depending on where you are, good afternoon. Ladies and gentlemen, my name is Stephen Cole, and I'm very honoured to be the moderator for today's webinar, which we've called The Changing Dynamics in the LNG Shipping Market. And it's hosted by the Al-Attiyah Foundation in partnership with Refinitiv and LSEG Business. Now, as ever, I will go over a few housekeeping rules for the discussion. For any technical issues during this webinar, you can click on the help button. For any questions for the speaker, click on the Q&A. And please be aware that in interests of time, we may be unable to get all the questions you've asked with the speakers, but I'll do my best, I promise you that. During the session, you'll be taking part in polling questions, and the recording of this session will be available using the same event link. So those are the housekeeping rules. Now to the context, why we're on this webinar. Well, the simple answer is the LNG industry, as we all know, is facing major economic and political shifts. The supply was already struggling to keep up with rebounding demand during the post-pandemic economic recovery. Now, the sanctions on Russian energy cargoes because of the war in Ukraine and the reduced pipeline gas deliveries from Russia to Europe, and there may be more, have taken major quantities of gas out of the delivery systems. Now, as winter approaches in the Northern Hemisphere, everybody is looking for security of energy supplies, and countries that were reliant on Russia's energy are turning to the LNG suppliers increasingly to stock up on storage for the winter. Nobody wants to get cold when the clocks go back. However, much of the LNG supply is delivered, as we know, on pre-agreed terms for both price and quantities to be delivered. The spot market for LNG is more limited, so prices have increased considerably. And that has had an impact on the market for LNG tankers. Again, the LNG tanker market has followed the LNG cargo market and matched tankers with contracts. Consequently, the spot tanker rates have also escalated significantly, and they've hit record highs because of the strong demand and limited supply. It's the nature of the market. Tankers also, of course, it's common sense to know they take several years to build. New LNG export facilities need new tankers. So it's the accepted practice to book building slots with shipbuilders to coincide with new LNG facilities. LNG ship construction facilities are now full well into the second half of the decade, and building a new ship takes several years. So that's the background, and that's a little bit of perspective on what we'll be talking about, with just a hint at some of the headline notes. So without any further ado, I'd like to introduce the speakers for this session. We have with us Andy Parums, LNG shipping expert. Our main speaker, Edward Gomeschel, Global Head of Gas, LNG and Coal Research at Refinitiv LSEG, and Patricia Roberts, Managing Director, LNG Worldwide and IT expert. Now, I'd like to invite Edward to give us a short presentation. So over to you, Edward.
Hello, folks. And good morning or good afternoon to wherever you are in the day. Before we begin the panel discussion, I thought I would take the opportunity to highlight one of the increasingly important parts of the LNG shipping market, the floating regasification, or the FSRU sector. So I'm just clicking on to the first slide of the presentation. Just to give a bit of a quick background to the FSRU sector, this part of the LNG shipping industry is about 17 years old. The first floating regas terminal was called Gulf Gateway in the US Gulf, and it began operations in 2005. And over the last 17 years, it has become a well-established technology. But since its inception, the original business model has very rarely been applied, as the market situation changed substantially, and Gulf Gateway itself was decommissioned 7 years after it began operations. The original aim was to capture short-term liquid gas market opportunities by providing LNG transportation and a buoy-based supply from the same vessel. Now, though, permanently or semi-permanently moored dockside facilities, i.e. FSRUs, are the norm, and they are primarily serving to support security of supply needs. Up to now, floating terminal developments have predominantly been concentrated in smaller niche markets across South and Central America, the Middle East, Southeast Asia, and indeed more recently Sub-Saharan Africa, where market size and future demand uncertainty provide limited support to the development of a conventional onshore terminal. So that's the context and the background to the FSRU market in a snapshot. But coming up to the present day, in the last year, the FSRU sector was suffering greatly from overcapacity, with around a quarter of the 45-strong global fleet operating not as FSRUs, but as LNG carriers. And this was due to the circumstances of new FSRU-based projects simply struggling to gain traction. Europe's response to the war in Ukraine, however, has been extremely bullish for the LNG market overall and has absolutely transformed the FSRU sector as European markets rapidly pivot away from a reliance on Russian piped gas. Now, this has seen most of the FSRUs that were operating as LNG carriers last year secure contracts to deploy as FSRUs. Last year also, just 3 mainland European markets operated FSRU-based terminals. And you can see these on the map on the slide in front of you. They were Italy, Croatia, and Lithuania. And the imported capacity between them was less than 20 BCM per year. There was also one facility under construction in Greece, Alexandroupolis, and this hit FID in February this year. Now, moving on to the second slide, this shows you how rapidly things have changed in the European FSRU market. So since the war in Ukraine started barely 6 months ago, Germany, Italy, the Netherlands, Finland, France, and even Albania have all secured charter agreements for the deployment of FSRUs over the next couple of years. Some are being relocated from their existing markets. These include Kuwait, Argentina, China, Egypt, Israel, and this highlights the very global impact Europe's race for new import capacity is having. Others will be new build, and these, of course, will have a longer lead time to deployment. The Netherlands started operating its first FSRU-based terminal just this month. This consists of both an FSRU and an FRU barge. And this is adding 8 BCM per year of new import capacity. An additional 20 BCM per year of capacity is expected to be installed by the end of this year, followed by a further 28 BCM in 2023, and so far 13 BCM by the end of 2024. And this is the time when the European Commission hopes to have eliminated Europe's long-term dependency on Russian piped gas. Now, one of the most important benefits for floating regas, as we've seen with the Netherlands, is the speed of execution versus conventional onshore terminals. Typically, we've been looking at a minimum of around 18 months benefit versus an onshore terminal, which can be anywhere up to 4 or 5 years from feasibility to first gas, as you can see in the schematic on the right. But that timeline, in fact, has been shown to be extremely conservative in the context of the current market environment. Eemshaven in the Netherlands is now the fastest deployed new terminal in history. It was commissioned, or it is being commissioned rather, as we speak, barely 6 months after Russia's invasion of Ukraine in February this year. It took over this record from Egypt's Ain Sokna. And like some of the new proposed European projects, lead time was reduced significantly due to both the availability of an existing FSRU, as well as having infrastructure in place for both the berthing of the FSRU and delivering gas into the network. For new build FSRUs, if an owner has a shipyard slot available and is using existing vessel design, then the schedule from sanction to delivery could be as little as 2 years. Now, presently, shipyard slot availability is extremely limited. The other major advantage of FSRU-based terminals is that they tend to be significantly cheaper than the onshore alternative. As a general rule, lower capex for FSRUs outweighs the higher OPEX costs that come from chartering the vessel. And this differential is even starker for small, low utilization or short duration terminals. And this highlights a third critical advantage for FSRUs, where there is uncertainty around the long-term demand for imported LNG. And this includes a market like Europe, which continues on its path towards a lower carbon energy system. Now, with that, I will hand back over to our moderator and prepare for any questions.
All right. Thanks very much, Edward. And let's move on even further to our first poll question. Now, that is, what is the biggest constraint right now in the LNG shipping market, which is causing an increase in new building prices? What is the biggest constraint right now in the LNG shipping market causing an increase in new building prices? The options are A, limited shipyard capacity, B, sharp rise in the prices of materials used for LNG containment systems, and 3, IMO's CHG reduction measures. So just press on A, B, or C, and we'll wait for your feedback. What is the biggest constraint now in the LNG shipping market causing an increase in new building prices? After that, I'll be asking for Pat and Andy's reaction to what Edward has to say, and I will be going to Pat first. So we're just waiting now for the poll results. It should be just a few seconds. Okay, well, it's pretty clear, and I'm sure the panel won't be surprised that limited shipyard capacity is pretty overwhelmingly the answer, 58.3%. But sharp rise in materials, significant, and IMO's CHG rejection measures are coming in third. So let's go back to what we were talking about and what Edward was talking about, and go to Pat first for your reaction.
Yes, thank you. Thank you very much. It's a perfect illustration, isn't it, of changing requirements in the market and the industry reacting to those changing needs and saying, what can we do to mobilize more FSRUs into Europe? One of the things I think I've been most impressed with is the sort of firm decision making, and that's on the part of Germany, which now will have 5 SFRUs, and also Italy, and quick decision making, and then a case of saying, how do you do most of the processes that you saw in the charts in parallel? So rather than doing things in stepwise sort of fashion, let's compress those timetables. And you'll have seen on the historical chart there, some of the FSRUs. There's one in Toscana in Italy that took something like 12 years in terms of the permitting and the permissions for this terminal to be built and operated. And as Edward pointed out, Eemshaven is a matter of about 9 months in total. So I think that's a sort of a good sign that the industry can react. But obviously, there's a finite amount of capacity in order to just keep on bringing FSRUs to market.
Certainly a good sign the industry can react very quickly in emergency. Andy?
Firstly, thank you for the introduction to me as an LNG shipping expert, which I'm not. I am an oil and gas industry expert. So it seems to me that this is clearly a real and pressing short-term problem. But in the longer term, I think that shipyards are not LNG shipyards; they're general shipyards. So availability of shipyards depends on the global economy, which we know is facing a lot of headwinds. So once you get into the sort of medium to long term, the constraint in terms of shipyards, in principle, ought to be manageable. Certainly, when Qatar Energy went out to bid for the ships, the very significant number of ships it's going to need for the North Field expansion, shipyards were very, very keen to get that business, so this glitch that's seen there at the moment, I query whether it's a fundamental problem or whether it's just a short-run problem. Now, that's not to belittle it as a short-run problem, but in the long term, it's a choke model. How much LNG liquefaction could be built, and that takes time, that takes lead times, versus how much capacity in total global shipyards is available, not just because the shipyards are not LNG specialists.
Okay, well, the International Energy Agency was quoted, I saw recently, as saying LNG shipping capacity is expected to grow by 30% between 21 and 25. And that is much faster than forecast for global LNG trade, which was 17%, and global LNG shipping demand, 23% over the same period. So the lack of ship construction capacity, together with the higher prices and longer delivery times, means the world will lack LNG shipping capacity to meet all the transport demands by 2025. So, Edward, won't a shortage of carriers only worsen the energy crisis?
If there is a shortage of carriers, yes, it will have a detrimental, exacerbating impact. I think in the supply-demand analysis of energy markets generally, as well as the LNG market specifically, logistics is sometimes not given the significance it ought to. In LNG, logistics is incredibly important, critical to the functioning of the market, getting LNG from supply centres to demand centres. Now, generally, while there is a finite capacity of LNG carriers at any given point, ton-mile is an incredibly important part of determining the tightness or the looseness of shipping capacity. Now, one material effect that the war in Ukraine has had on LNG trade flows is seeing increased volumes coming from the US. Now, the majority of US long-term contracts are taken by East Asian players. And with these volumes coming to Europe, there's typically a shorter ton-mile ratio, which means that capacity, shipping capacity, is actually greater than you might otherwise think it is. So it can be, with all the seismic events going on at the moment, there's a lot of nuance to the market, and we as analysts are attempting to interpret these significant changes as we're running along.
Will that shortage of carriers have any impact on LNG scope to support what is called the green energy transition?
Overall, I think it is clear that a combination of pragmatism, if we're speaking particularly about European needs again, a combination of pragmatism of the current market realities and a determination to continue embarking on a path towards a lower carbon energy system does, to my mind, support the use of LNG for years, if not decades to come, in the European market and globally. The benefit of, if going back to my presentation, the benefit of installing FSRU capacity. So by the end of 2024, we will have, at current estimates, about 70 BCM per year of floating regas capacity that can be picked up and moved elsewhere in the global market. So LNG coming into Europe, utilizing these floating import terminals, can support the energy security needs of today, while potentially supporting the lower carbon energy system of tomorrow in other markets. So without taking this point further, liquefaction supply depends on demand certainty over decades. Europe demand is uncertain over those decades, but there is a robust, well-established technology in regards to floating regas that demonstrates that import capacity can be moved to where the demand centres are, and that can support the mitigation of any uncertainty or some of the uncertainty around demand in Europe, and supporting that liquefaction, which is incredibly capital intensive. It is 8 out of 10 of the biggest ever project financings are LNG. It's billions, if not tens of billions of cost, so it needs certainty. And FSRUs provide a little bit of that certainty.
Okay, taking this point a bit further, Patricia, I asked Edward, won't the shortage of carriers worsen the energy crisis? Is or are floating storage and regasification units the only answer to that?
Well, they're a good primary answer to it, for sure, and that's why they're being built. They're being seen as something that you can put on station relatively quickly, particularly if they're deployable rather than having to have new builds, and they're movable, transportable. There's also a lot of industry cooperation, though, because as Edward was talking about LNG shipping, it is probably one of the most inefficient shipping of hydrocarbons in the world. And LNG vessels may spend up to 50% of their time in ballast. So there's a whole sort of drive here of a lot more cooperation in terms of trying to put vessels onto a lot more efficiency in terms of their routing. So you'll see as well cooperation between Asian utilities and European utilities, just to try to optimize the whole shipping dynamic. So I'm optimistic that that's another industry efficiency, if you like, that's there to be used, but we haven't accessed it and really leveraged it to the full.
And Andy Parums, LNG oil and gas industry expert, would you agree with that?
I think, again, I don't see a long-term constraint on shipping. I have a slight concern about the capital available into the shipping business, because somebody has to fund the ships. Now, you can go a route where you expect the ship owner to finance the ships based on long-term charters, but it comes a little bit back to Edward's point about long-term commitment. So in order for the ship owner to finance the new ship, he needs a contract in his hand to take to the bank. So the dilemma that faces people on LNG contracts to support liquefaction also faces a little bit the shipping industry as to whether or not enough people would be willing to offer those long-term guaranteed contracts to finance the next set of new builds. I personally don't think that the problem is, if there is a problem, I don't think it's physical. I don't think it's a lead time problem. I think it's a business model issue in order to attract enough capital into the sector.
Okay, thanks, Andy. I want to go back to Patricia again to pick up on the point that Edward made about the Ukraine war. We have to talk about this because this is perhaps the cause of many emergencies, not just in Europe, but a knock-on effect around the world. As far as you're concerned, Patricia, what's been the commercial impact of Ukraine on the LNG shipping market?
Well, first of all, I think you've seen that it's created a bit of a vacuum of LNG supply in Europe with the downturn of Russian pipeline gas. And so Europe has acted as a bit of a suction pump, trying to get as much LNG into Europe as possible. And in the first 8 months of this year, Europe as a region imported more LNG than it did in the whole of 2021. So it's on course to have a big draw on LNG shipping capacity. And as Edward said, quite a lot of that LNG is being sourced from the United States. And so you would say, yes, there's a big draw on the need for LNG shipping. But prior to that being directed to Europe, there was a lot of that LNG from the States going to Asia. And there you needed double the amount of shipping capacity, roughly, in order to deliver 1 million tons a year into Asia. So on the one hand, Europe has commercially required a lot more LNG, but it's a more efficient route to import into Europe from the States. Generally speaking, we've seen volatile shipping rates throughout the year. This week, I think the spot charter rate is at $160,000 a day. And to cover all of its costs and make an adequate return, you would say as a rule of thumb, the shipping industry needs about $70,000 a day. So clearly shipping companies on the spot market are making quite a lot of money out of the current situation.
Edward, if I can come back to you, because you made or you hinted at a point that I'm fascinated by. For Mr. Putin, turning off the gas taps to Europe remains his trump card, and it's one that he can only play once, in my opinion. But do you think there's a realistic time scale for Europe to survive without Russian gas? I know this is going off base a little, but I think it's a big question.
So I'm not clairvoyant, but this is clearly the biggest structural test Europe's energy markets have ever been met with. Now, there is, prior to this current crisis, there are EU regulatory areas which require EU member states to provide support and resiliency to neighbouring markets that might be suffering from this crisis. And this touches on Patricia's points around cooperation. There's one thing to be legislated, to be politically committed by regulation, by legislature, but to be perfectly honest, it's more to do with a factor of goodwill between, so immense political cooperation, immense corporate cooperation, and rather a lot of goodwill from suppliers to mitigate the impact of Russian drastically reduced pipeline flows. I think up to now we have seen alternative forms, alternative supply bridge that gap with the dramatic fall in Russian supply versus the increase in LNG, which has been drastic, but also other pipe gas supply as well by the Southern Corridor and to a lesser extent North Africa. The timescale is, I think, it's a political one. The European Commission have made a determination that they can transition by the end of 2024 away from a long-term dependency on Russian gas. We have seen, realistic? As you say,
Edward, is that realistic? 2024?
So what we're seeing right now was not in anyone's analysis or forecasts 12 months ago. What is realistic now is very different to what is realistic just a few short months ago. The only real comparator is probably the Fukushima crisis in Japan a little over 10 years ago, which saw Japan's entire nuclear fleet shut down. We saw an initial rapid diversion of LNG cargoes to meet the immediate increased demand. And then this was followed by a huge structural shift in LNG flows. So over the space of 1 year, LNG demand in Japan grew 11%, so about 8 million tons. And then in the first 18 months, since the nuclear crisis, it increased almost 25% to 88 million tons. So another 9-10 million tons on top of that. And this was all met by predominantly existing supply. It wasn't met by new supply. And that's because liquefaction takes many years to come online. New liquefaction takes many years to come online. So most of that, almost 20 million tons of supply came from the existing market. And that was down to the political cooperation, the corporate cooperation, and that goodwill from stakeholders. And Europe is in that situation right now. The difference probably is, or one of the significant differences, Japan had and has designated, committed long-term contracts, and Europe, through the design of its market, has a lot more flexibility in its contracts, which means suppliers aren't contractually committed to bring their supplies into Europe. And so that's probably one of the key aspects that needs to be met for the political deadline to be met. And so I would expect to see some policy support for buyers, because it is the market that will be buying this LNG, not governments, but they will need policy support for the buyers to contractually commit to firm volumes and provide that certainty to suppliers to have any hope of meeting this deadline.
Well, we focused, haven't we, on Europe, but the war has focused minds all around the world on energy sources, supplies. Did anyone believe the alternatives to LNG are a realistic threat to LNG suppliers at this stage?
No. It takes over the very long term, yes. But right now, no. The energy security concerns are such that there's room for LNG to grow quite strongly over the coming years. So I don't think that the renewables growth is very progressive. It's not dramatic over a period of a couple of years. It's just very, very progressive, and it's hard to accelerate or decelerate. So I personally think that the issue for LNG is that since it's the swing fuel, it's a little bit of a swing fuel. It's a little bit vulnerable to economic downturn, because if you built renewables capacity, hydro, nuclear, solar, you're going to use it. It's the cheapest marginal source of power, so it will be used. So LNG is a little bit of a swing, and if LNG has a kind of risk in this over a period of say 5 years, it's to do with economic downturn. Okay. If there were to be a severe recession.
And Patricia, I think Andy is right, isn't it? Renewables are progressive.
They certainly are. I mean, what we're seeing as a knee-jerk reaction to the Ukraine crisis is very much a sort of a switch back to coal. And countries like China.
Who would have forecast that?
Who would have? China, India, European countries as well, burning coal on a pragmatic basis of we require energy. We'll get back on track with carbon footprint reduction, but in the very shortest of term, the pragmatism rules. And I think the issue is that if LNG prices stay relatively high, it will price out some of the emerging, developing countries in Asia, which were always planning to substitute coal with gas. So it will defer that timetable somewhat until LNG prices moderate. And as recently as a couple of months ago, I was chairing a conference where there was quite a lot of representation from India that said we're prepared to sit out and wait a few years until LNG prices moderate. And in that time, our cover will be coal. So that's sort of one issue. And of course, the big demand growth that we foresaw in Asia over the next sort of 10 years or so was principally LNG displacing coal. So that may take a different trajectory because of the current crisis. But the other thing I think no one's mentioned so far, and it is important, is with high prices comes demand destruction. And to get back into an energy balance, there is a certain amount of energy conservation, energy efficiency, and the plea in Europe that if Russian pipeline gas, which at the moment only is about 9% of supply versus last year at 40%, if that really does get cut off, then demand destruction is going to become a vital part of rebalancing supply demand.
Okay,
and I haven't said the word rationing, but there is this sort of prospect of having to forcibly get supply demand back into balance at reasonable prices.
Okay, well, I think the key word you used there was pragmatism. Let's have a look. Let's open our second poll because I want to move on from greener issues to sort of safety, I think. But the question we're asking now is, what is the most viable solution for older LNG carriers to comply with the new IMO carbon intensity rules? And there are the alternative answers: converting the vessels to FSRUs, which we've heard so much about, limiting the vessels' maximum speed to reduce emission rates, and upgrading the vessels. They're the three options, and vote now. So what is the most viable solution for older LNG carriers to comply? How old? I'm not clear. To comply with the new IMO carbon intensity rules. Converting the vessels to FSRUs, limiting the vessel's maximum speed to reduce emission rates, and upgrading the vessels. And I would hesitate to give an expert answer, but I think I know which one it is. Let's see what you all think. A, B, or C. And we'll get the results of the poll question to you in just a second. And then I think we'll move on to some safety issues. Oh, well, that is so close. That's very interesting. Upgrading the vessels, because how long it takes to upgrade a vessel, who knows? Upgrading the vessels, converting the vessels, limiting to reduce emission rates. So that, I think, is once again the pragmatic answer. Can I have your reaction, panel, starting with, say, Andy this time?
I think the poll results reflects what will happen. It will kind of be a mix of all the above. converting to FSRU just depends on how much demand there is. I mean, I'm sure that conversion will happen depending on where people can get slots and where they can foresee demand. So that's a piece of it, but is limited in terms of the number of vessels that are likely to be converted.
Okay.
So a mix of the three.
And Edward, your reaction?
So the LNG fleet is parts of it are pretty old. We've got old ladies, as the older LNG carriers are known, operating, that have been going since the 1980s. LNG carriers tend to have a much longer lifespan than some other areas of the energy shipping industry. And the market has evolved to a point where more modern, more energy efficient vessels, and also more efficient in regards to boil off as well, i.e. degradation of the cargo, to have a premium charter rate attached to them. And the older vessels are priced accordingly, so they're priced at a discount, typically to the newer, more efficient vessels. There's been a long-running issue whether the penalties that are in place provide enough incentive to incentivize any kind of upgrading to the vessel or any kind of alteration to the way the vessel is used and run. I mean, especially in these times, any penalty fee is absolutely dwarfed by the profit traders are making on their LNG cargo. So it is hard to, in this very acute situation, to see any kind of incentive towards upgrading the vessel. I think more structurally, there is a significant focus on providing the most efficient vessels for new build, and adhering to new carbon intensity rules is front and center of shipbuilders and license holders' minds. But the current market environment, I can't see the incentive for upgrading vessels, but that would be the way to go, I'm sure.
And Patricia, and I also want to add the line on the back of what Edward said. How do producers achieve the required speed of delivery, but without compromising safety on either new vessels or reconditioned vessels or upgraded vessels?
So first of all, looking at the poll results, if you add together option A and option C, you get to nearly 80% of the vote was to do something to convert or upgrade the vessel in some way, to keep it relevant to the market requirements. That there was just 22% there sort of accepting the limitations and saying, right, well, we will make it a vessel that can't go as fast, so it increases its units costs. On options A and C, there's also another slightly disruptive model which is floating around in the industry at the moment, and that is a company, New Fortress Energy, is looking to try to speed up the whole delivery program for new liquefaction, essentially by using lots of old parts of the supply chain. So taking LNG vessels and using them not for regas, but just as floating storage on their floating liquefaction project. So they'd have a floating liquefaction project plus an old vessel acting as temporary storage in order to load vessels. So in a way, I think our industry is prone to innovation and ideas. So I think I am somewhere between option A and C in some ways, of just saying, make them fit for purpose to do something useful in the industry.
Exactly, without compromising safety, of course.
The same as us consultants, actually. Keep ourselves relevant.
Exactly. Yeah, Edward, to what extent are FSRU vessels available, and how fast can ship conversions take place?
So again, this time last year, FSRU market was very, very loose. This year, it's a transformed market for FSRUs. So the short answer is the availability of FSRUs is very, very limited. Within the European market, we're seeing 10 contracted FSRUs over the next 18, 24 months. And about half of these have come from, or are coming from, existing charters. So charters are being ended. So no contracts, as far as we're aware, are being broken, but where a charter is coming to an end and it would normally be extended, it is not being extended, and the vessels are being redeployed to Europe. And this is very much the quickest way for Europe to increase its capacity, by having existing FSRUs that are operating as LNG carriers or operating as FSRUs but can be brought into Europe. And that has created incredible tightness in the market. So last year, about a quarter of FSRUs were not operating as FSRUs, they were operating as LNG carriers. Since then, as I said, we've had about 10 FSRUs, or 10 of those FSRUs have a new contract, a new charter agreement signed to come into Europe over the next 24 months. So the availability right now for an FSRU, an existing FSRU, is next to none. So the charter rates for an FSRU have typically ranged anywhere between 115,000 to 168,000. That's kind of the minimum and the maximum that we're aware of. Now it's over 200,000, well over 200,000, to get those, incentivize those FSRUs and bring them into Europe. And these are on charter so charter rates vary dramatically from 2 years to 25 years. I'm picking up an average of about 10 years for the charters coming into Europe. And so this means the vessels that are being contracted aren't going to be available for a long time. And we will need new built vessels, new built FSRUs to come in, or converted LNG carriers. Now, Golar is the conversion expert. Before Golar, there was no conversions; it was all new build. So Golar is one of the big FSRU players, alongside Höegh and Accelerate, and there are one or two, well, a few more than that now, interlopers, disruptors coming into the market as well. But it's typically been a big three, and now it's a wider group of 5 or 6, and then a few others which have one vessel or two vessels as well. And so Höegh, for the first time, is looking at converting a vessel. So we're seeing the demand there, and FSRU providers wanting to capture these extremely high charter rates. And to do that, conversion's quicker. New build, as I was showing on the last slide of the presentation, can take, typically FSRU will take 3 years from feasibility to delivery to customer. If there is, if everything is set up perfectly, a slot is available, a design has been developed, then it's 2 years for a new FSRU. And we would expect new build FSRUs to come in that 2-year time frame, just because of the incentive and the coordination from buyers, suppliers, shippers to get those out. So I would expect it to be very, very tight over the next couple of years, and then when new build FSUs come into the market, there's a bit more question.
Ladies and gentlemen, we've had a couple of questions from the audience, and one from Gina Tate. Will the Ukraine conflict give other energy sources the chance to grow, considering the current situation? We've talked around the green option, haven't we? These are the alternative energy sources, I suspect, from Gina. Anybody like to answer that quickly? Patricia or Andy?
Simple answer: to the extent that Russian gas is displaced from the market, something else has to come. Now, it'll take Russia a long time to get replacement outlets for that pipeline volume. I think it's 155 billion cubic meters a year by looking east. So yes, something has to grow. And Gina's alluded to coal in Asia, increasing renewables, energy conservation, demand destruction. All of those will have a space to fill to replace the Russian gas that's shut in.
Okay. If everybody's
and I guess
okay with that, yeah,
maybe there's one more thing I can add in is the word nuclear. I think that nuclear is now sort of a consideration throughout Asia. In fact, China is looking at nuclear, and I think also you'll see Japan is also playing with the concept of nuclear. So situations that we thought, yes, situations where we thought, right, we have made definite decisions in the industry and various countries' pledges. At the moment, you're in such a sort of uncharted territory where you're trying to get to energy security, where it's affordable and it's as clean as possible. We may be in for some surprises as to what particular countries do next.
Yeah. And it does seem madness, for example, to close nuclear stations, which I think Germany is still saying it's gone ahead to close its remaining nuclear, which seems in the current situation to be a rather strange strategy.
It depends on the day. Some days they say they're going to reopen some of the old ones.
Yeah.
Anyway, Mariam Ali is asking, can we use old vessels for other purposes? Edward?
So LNG vessels are incredibly highly spec'd. You don't really get any other kind of vessel like this in the energy market. They are very highly pressurized. They are cooled to support the sustaining the liquefaction of gas. So you're looking at 200 million there or thereabouts for an LNG carrier. It doesn't make sense to deploy it within any other area of commodities. The only other commodity that I would think might be LPG, but it would be a strange. So I mean, we do live in strange times, but it would be a strange circumstance to see that. Conversely, LPG carriers tend to just require very high pressure to contain their liquefied state, rather than any cooling environment. And we do have a handful of LPG vessels that are high enough spec to be used as LNG carriers. And considering the incredible high demand, particularly in Europe, for LNG in the coming years, that is a possibility. It's certainly not a base case possibility, but as I say, we live in strange times, and that is something that could potentially happen. But to be honest, I've got no idea what an LNG vessel could be used for if it's not carrying LNG.
No. Okay, let's move on to the third poll. Thanks very much, Edward, for that. The third poll is asking the question, what is the best alternative supply option for the EU if Russia shuts off LNG supply? And there are the options, the alternatives: other countries in Europe, Africa, the Middle East, the United States. And I think Ed was already raising his eyebrows. I think I think this will be very clear indeed, this one. What is the best alternative supply option for the EU if Russia shuts off LNG supply? other countries in Europe, Africa. I mean, big problems with Mozambique, such a shame. What a size of a field there. The Middle East or the United States. And some are saying the only people winning in this energy war is the United States. I don't know if that's true or not. And then we will go to the panel to find out just brief reactions, if you will, ladies and gentlemen. Oh, gosh, there you are. Well, that's taken me by surprise. So 60% say Africa and the Middle East. 40% other countries in Europe are divided, and the United States. I thought it would be overwhelmingly the Middle East and the United States, but there you are. That shows you how wrong I can be. Who would like to come in first? Patricia, that's the lady first.
Thank you. Well, of course, when we take about the best alternative supply option, the best alternative supply option is a diversified portfolio of supplies where you're not just relying on one country or one region. So it doesn't surprise me at all to see a spread. And I think that is what will actually happen, that there will be a good diversified spread of supplies where all of these different sellers will be offering slightly different commercial options. And I would say that's exactly how I see it playing out, a real mixture.
Lovely. And I think that's exactly right. And I think that answers the reaction to this, because it's very clear from the poll results. But I want to take one last question before we wrap up, from Mohammed Reda, who asked, is upgrading FSRU vessels worth the cost compared to building new ones that comply with regulations? A very good question. Edward.
It's half a dozen of one, six of the other. It really is a case-by-case basis. So when I've been talking about FSRUs, I've been speaking generalities, but every FSRU project has its own circumstances, has its differences. Some projects it will certainly make sense to convert an LNG carrier to an FSRU, especially an old lady, I suppose. Others, a new build will provide that future-proofing. One of the other things which we've not touched on as well is the capacity of FSRUs. Some of the older FSRUs have got a much smaller import capacity than new build FSRUs. And when we were looking at niche markets, smaller markets in Central America, Sub-Saharan Africa, that smaller import capacity was absolutely fine. Now we're looking at big European markets. You need big import capacity. And so one thing that we could see, and we have seen in one or two cases previously, is upgrading existing FSRUs to increase their import capacity, as well as the conversion of LNG carriers to FSRUs. So I'm afraid, Mohammed, I've not really answered your question, but I've given you some of the options.
Well, that's good. That's almost a political answer. Edward Commercial, Global Head of Gas, LNG and Coal Research at Refinitiv LSEG. Andy Parums, LNG Oil and Gas Industry Expert. And Patricia Roberts, MD of LNG Worldwide. Thank you so much for those insights. I think the last word must basically be Europe's energy market was not built for this crisis. And that's why the transportation of LNG will grow increasingly important. Thank you to everyone for attending this webinar series, supported by the Al-Attiyah Foundation in partnership with Refinitiv and LSEG Business. I'm Stephen Cole. Many thanks to you.